Hey everybody, this is RC Peck with my weekend podcast, and I am talking to you from Marshall Street in downtown Redwood City. Tomorrow is 4th of July, and that means that this town goes crazy and lines the parade route 4, 5, 6 days before it even starts with their own chairs. Well, it has gotten absolutely out of control over the past few years, so the police have instated this new rule that you cannot have chairs out before 6 o'clock. So of course I come down at 5 and it's already a zoo down here. There's people all over. It's totally crazy. Chairs are out. People are marking off their spots. Of course I'm doing that too. So I have to sit here at the spot until 6 o'clock when it becomes official. So I figure I'm going to do my weekend podcast with you here out on Marshall Street in Redwood City. And you may hear cars, people, ATM machines all in the background, but that's all kind of part of the podcast for the 4th of July weekend. So the theme for this weekend is asset price inflation doesn't count. The government wants you to believe that the only thing that counts is consumer price inflation. And so all over the place they talk about the CPI and what the CPI is doing. Is the CPI up? Is the CPI down? And their entire focus is on the consumer price numbers and whether those are up or down. But I'm going to show you how that actually doesn't create market turmoil. It's actually asset price inflation and deflation that creates all the turmoil over the last, well, since 1896. There's a Harley that just went by. So the first price chart I want to show you is the NASDAQ from about 1991 to March of 2000. Now, you can't tell, but this price chart goes up 16 times. Talk about inflationary. But since it's an asset, the Federal Reserve, doesn't actually care and doesn't actually pay attention to it. Anyone that remembers, even just a little while ago, this fell 2/3. It fell by 2/3. The fall of the NASDAQ absolutely ruined certain people's futures, some of them forever, some of them for a little bit. But it's actually asset price inflation that hurts people's futures, not consumer price. This next chart is a price chart of real estate. Now this price chart actually goes from 1983 to 2013, but the part I want you to focus on is really 1999, right there, to 2006. Real estate in this country went up 100%. Talk about inflationary, that's huge. But again, the Fed doesn't want you to notice about real assets going up, just consumer price going up or down. Now this chartreuse colored line or violet line, whatever you want to call it, that's what the Fed, or actually the Bureau of Labor Statistics, that's what they look at for inflation when it comes to real estate. They call that owner equivalent rent index. And as you can see, it did not take into account at all the price move up or the price move down. They think it's just this nice constant number that just slightly goes up. And that's of course absolutely not true. But you know, the government really doesn't want you to pay attention to that. Got a guy walking by on his cell phone, a little upset because all of us crazies got here about an hour before he did. Now what the US has been able to do is actually export their inflation to other countries around the world, namely Turkey, Egypt, India, Indonesia, Brazil, Russia. If we can export our consumer inflation to other countries, and the price chart you're looking at here is, actually not a price chart, but this information you're looking at, the higher up the country name, the higher the year-over-year inflation is in that country. So we can export our inflation now. If we don't see it here, it doesn't count. Next, we have the Federal Reserve's balance sheet of 10-year Treasury notes, pretty inflationary, going from 200 million to 1.8 billion. But again, don't look at that. That's not inflationary. That doesn't really matter. What's the most amazing part of this price chart is the Federal Reserve buys, okay, has over a third of all outstanding 10-year treasuries in this country. A third! Over a third! I mean, this is incredible. They're buying over a third of the 10-year treasuries in this country. I don't think that's natural. It's certainly not healthy. There's absolutely inflation in the top 1% of the top 1%'s net worth. That's what the price chart that you're looking at right here. It's actually the top 0.01%. So definitely inflationary of that top 1% of the 1% in this country. They're getting much, much, much richer. And the top 10% of the 1% is getting richer. If you look at just the top 1% of people, they're actually as a whole not really getting richer, and if you adjust for inflation, they're not getting richer at all. So there's really not a lot of net worth increasing happening for the bottom 99.99% of this country. So inflation is not showing up there. Absolutely inflation going on with total credit market debt in this country. This is crazy. If you look at the little circle, green circle there, that's where the world almost got destroyed because, a little bit of debt fell. But clearly inflation and the total credit market debt going on in this country. I threw this slide in here. This is actually the cost of 1 pound of 100% pure beef on July 4th, going back to 1984. You can see that it started at $1.25 a pound, and today it's at $3.75 a pound. This blue asterisk here is when this guy named Alan Greenspan lowered interest rates to ridiculous low rates, and you see how inflation took off here. And then he handed the baton to Ben Bernanke. He started printing. You could see that ground beef went up here too. This doesn't even show you what grass-fed organic ground beef is selling for today. I guarantee you the hockey stick is even sharper with those. Absolutely inflation going on and people getting part-time jobs. The employment numbers came out this week, and we found out that about 800,000 people were added to the part-time working jobs list. Well, I have to believe that most of those people wanted full-time jobs with benefits and health care, but they didn't. They had to go with something part-time. So people getting part-time jobs is getting inflationary too. While, notice this, people getting full-time jobs actually fell over 500,000. That's deflationary. It feels like this country it's just like this new paradigm where there's more and more part-time, less and less full-time, and man, that's going to hurt the bottom 99% of people. Now, this is what the Bureau of Labor Statistics actually wants you to pay attention to, and this is the 12-month percentage year-over-year change. And as you can see, it's only about 1.5% right now. And they say, hey, that's not bad. We're just going to keep printing. We're going to keep interest rates to ridiculously low numbers until, we get some sort of crazy inflation rate. And they will do it. They will keep them low until then. I got some people yelling to each other across the street. All part of the great excitement of Redwood City before the 4th of July parade, which starts at 10 o'clock tomorrow morning. Now, you guys will not get this until Saturday, but I'm actually recording this Thursday afternoon. So here's the takeaway. Here's the thing that I really want you to get. It's asset price inflation and asset price hyperinflation that's actually caused every major market crash since 1896, and not consumer price inflation. So if you want to watch something, watch the stock market going up and real estate going up. Now here's the good news. We've got the market probability strategy and indicator to tell us when it's very low probability of making money in the stock market. That is still in green light mode. If it changes out of green light mode into red light mode, all paid up subscribers, I will let you know right away. That got us out of the 50% stock market crash in 2000. And it has avoided the 58% stock market crash from 2007 to 2009. And it has a very good history. I back-tested this back to 1896. And it's showing us the probability of making or losing money in the market. And it's such a very, very powerful indicator. So that's what we want to look at to see if things are going to turn ugly. And so far right now, we're in green mode. We're in high probability mode. Whether you think the market should go up or should not go up, it is going up. Europe's printing, US is printing, Japan's printing, China's printing, everyone's printing, and that inflation is showing up in the stock market. So guys, this is just another step in really helping you kind of get that fearless, security of your future, the freedom of your future, so you can really choose what you want to do with your time. Hey guys, until next time, this is RC Peck.